My name is Mike Platt, and I'm one of the principals of Inside Public Accounting, IPA. I'd like to welcome you to our discussion on best practices to complete the IPA survey. Our intention is that your investment of time over the next hour will save you time when completing the survey, and hopefully will connect some of the dots, highlighting the connection between you completing the IPA survey benchmarking form and your firm improving its understanding of its strengths and weaknesses, understanding the competitive landscape, and providing insights into key industry analytics and key industry metrics. Before we begin, let me go over a couple of quick housekeeping notes regarding today's discussion. As I mentioned, this session is being recorded, so you will be able to access it on demand as you begin completing the survey. We will be sending a link out and up on our blog, and it will be communicated to you as to where that link will be to get a copy of the recording of this if you would like it. There are participants from CPA firms all across North America in the session today, and we want to welcome everybody to the session. To help everyone hear well, we have initially muted all the telephone lines, so there shouldn't be any background noise. If you do have a question as we proceed today, you've got several ways of asking it. Either send a chat message through your webinar window at the lower right-hand corner to the organizers of this webinar, or look for the icon to raise your hand and we'll unmute your line so you can ask your question. You can always call us at the office at 317-733-1920, or just send us an email at survey@plattgroupllc.com. Finally, this session is not available for CPE today, but as I mentioned earlier, our intent is for your investment of time today to save you a lot of time later and help improve your firm's operations to impact the bottom line. But let me start out with just a little bit about Inside Public Accounting, just so everybody can get a perspective on this. Since 1987, Inside Public Accounting has been providing ideas, trends, best practices, and benchmarking metrics aimed at multi-partner firms in public accounting. Our purpose at IPA is simple: to help the profession improve its level of service to clients and to improve the financial and overall well-being of both partners and staff who work in public accounting, while providing you with actionable insights that could impact your bottom line. IPA does this through newsletters that offer strategies on practice management as well as potential new services for your firms. IPA does this through our annual Prime Symposium, a 2.5-day conference now in its 5th year of bringing the best practices of the best CPA firms to help firms enhance and grow their business. And IPA does this through a suite of survey products and services, including additional individual disciplines of firm administration, human resources, and information technology, as well as our signature benchmarking product, the annual survey and analysis of firms, which is now in its 26th year, which we'll be talking about today. So let's take a look at a few best practices to address from the start. You've received the IPA survey by mail. Your firm has determined that you will be the point person in getting it done. You've added it to your to-do list and have put the deadline on your calendar. So now what can you do to make the process as efficient, as accurate, and as valuable to your firm as possible? Number one is to confirm your participation. To ensure that you're on IPA's radar screen and to avoid any unnecessary reminders over the next couple of months, we would ask you to send an email to survey@plattgroupllc.com to confirm that your firm will participate in the survey this year. So if you haven't done that yet, please do so. Number two, you can start the process right now, regardless of whether your year-end is December or whether your year-end is June. There's a large portion of the IPA survey that you can complete today. So we'd encourage you to get a head start on the deadline by starting now. Complete the questions that are not dependent on your year-end numbers. And by our estimate, it's probably about 50 to 60% of the survey you can complete immediately. Number 3, consult the definitions. We'll take a look at the survey tab in a moment, but we've included a lot of definitions in there. They're there not only to help you understand what the survey is asking for, but also to help normalize the responses so they're more comparable with other firms. Be sure to check the Survey Definitions tab for explanations of what the survey is asking for. Number 4, identify the resources in your firm that can help. We'd ask you on the front end to review the questions, make a list of the various management reports that you'll need to consult with to complete the various sections. Also, determine if there's anybody else in the firm or multiple people in the firm that have quicker access to accurate information, and consider possibly parsing out that section of the survey to them to complete and send back to you. And then number 5, consider tracking the information that you're not currently tracking. The IPA survey has been developed over decades of consultation with practitioners and leading consultants on the kind of information that is most helpful for leaders of CPA firms to know. If your firm is not measuring or tracking some of this data, you might want to consider how it could help you if you did. So let's start with a quick frame of reference regarding the IPA survey itself. The IPA Survey and Analysis of Firms is a comprehensive benchmarking survey that covers key financial and operational performance measures. We're anticipating about 600 accounting firms participating this year, making the populations you can compare yourself to both robust and more meaningful. We're working with many different accounting associations to help streamline the survey process and to also reduce survey fatigue on your end. We're using the same survey for the larger IPA benchmarking report as we are with the associations. So the good news is, for those of you with accounting associations that are working with us, you'll only have to fill in one survey form. For some associations, participation in this survey is a condition of membership. Our audience of participating firms within IPA is primarily the top 1,000 accounting firms in the country, so your numbers will be aggregated with other firms of your size for relevant analysis and for benchmarking purposes. So let me switch real quick to the Excel survey itself. So let's take a look at how the IPA survey form is laid out. When you open the email from us and click on the Excel spreadsheet, you'll be taken to a welcome page with instructions on how to fill out the form, deadlines, and how to submit the form. Your deadlines will be clearly stated here on the welcome page. Some associations have early deadlines to ensure that their data is ready for the spring meetings, and your assistance in meeting those deadlines is crucial. On here, which is the generic survey that is sent out to many firms, we see the general deadlines for submissions are May the 1st for firms with the fiscal year end of July through December, May the 29th for those firms with a fiscal year end of January or February, and June 5th for those firms with a March or April year end. If your year end is May or June, or if you are working with an association with an earlier deadline and you've got a later fiscal year, please contact our office to discuss your situation. As you look through the welcome page, you'll see various instructions, guidelines on what to do, how to fill out the form, and best practices to follow. To get to the actual survey form itself, you can either click in this area in blue, which is a hyperlink to the survey form, or you will click on the actual tab at the bottom to the IPA survey form itself. A couple of quick comments on the tabs before we get into the survey form. The second tab here is the actual IPA survey form itself, which we'll come back to in a second. Many of you have 3 additional tabs, which include the Firm Administration Survey, the Human Resources Survey, and the Information Technology Survey. If you don't have these tabs on your Excel workbook, it's because your association has requested that you just get the IPA survey itself. These are 3 additional optional surveys that IPA has developed to delve deeper into these areas of practice. Deadlines for all 3 operational surveys is June the 5th, and some associations that are working with us to do these surveys have an earlier deadline, so check on that. There is no cost to participate in these surveys, and you will receive a complimentary executive summary when the data has been compiled later this year if you participate. So if you don't have these 3 extra tabs and would like to participate in the operational surveys, please contact us. This next tab is a helpful guide to definitions so that we are all providing comparable information. We encourage you to refer to this tab when completing the form. And finally, another tab on firm administration definitions if you are going to be doing the firm administration tab. And then finally, a last tab, the firm clarifications tab, is the place for you to provide clarifications or further explanation of answers that are needed. So that's how the Excel document is laid out. So let's go back to the IPA survey form, which is what we're here to talk about today. Over the last few months, we've worked with focus groups, reaching out to various managing partners, CFOs, and firm administrators who are just like you to get input and feedback on ways to enhance the IPA survey, ways to define the questions better, and ways to make responding much easier. For the remainder of our time today, we'll go through each section of the survey, highlight the changes that were made from last year, and they're just a small handful, and focus on the areas that have given firms the most challenges or areas where the most common mistakes occur. Again, if you have any questions along the way, feel free to chat with us in the lower right-hand corner of your screen, raise your hand, or send us an email, and we will respond. Okay, so here we go. On the IPA survey form, throughout the survey form, everything in white is an input field where you will be able to enter your data there. So if you see a field in any of these Excel spreadsheets in white, we are looking for you to give us your information. On rows 8 and 9, this first section covers firm information. You are the expert in your firm, not us, so help us out by putting your firm name and the managing partner's name exactly as you wish it to appear in print. Anything you put in this field will be considered your approval for how it should appear in print. The rest of the firm information, pretty straightforward. Down on the fiscal year end on row 17, be sure to tell us not only the month and day of your fiscal year end, but also the year that you are reporting. Our contact information is here on row 18 in case you have a fiscal year end after May 2015 and would like to discuss the possibility of an extension. All right, rows 20 through 27, the firm survey contacts and the complimentary survey. Please do include contact information for your firm. Be sure to give us somebody we can go back to with any questions for the survey, any accolades, and to send the survey summary to. So that's really important. Down on the firm memberships, let me kind of point out a feature of our survey that starts in row 29. Notice the drop-down arrow here. This indicates that there's a drop-down menu with selections to choose from. These drop-down menus are used throughout the survey, so anytime you see the down arrow when you are in a cell, please be sure to click on it and just select your option. That will eliminate our need for a lot of different kinds of answers for what we're looking for, a relatively narrow type of answer in there. Down on client information, rows 36 and 37, we're just looking for the number of SEC clients. Fairly straightforward. This is a question that we've had for a number of years. So let's move on to section on mergers and acquisitions. This refers to any merger activity that you had during the fiscal year that you are reporting. Please complete this section only if you acquired another accounting firm during the year that you are reporting. and that really has to do with rows 39 through 42. If you acquired another accounting firm, give us the details in this. If you brought in a partner from another firm as a lateral hire, and that partner brought a book of business with them, that's not, in our definition, an acquisition of a firm, so that would not be counted as a merger. Row 43 is new this year. If you did have a merger in the year previous to the fiscal year you're reporting, we would ask you to just to indicate a yes or no here in this place. So it gives us an idea of some of the lead up to some of the growth that your firm has experienced based on whether you reported a merger in the year previous to the one that you are talking about today. All right, so let's move on to the section entitled Financial Information, beginning on row 44. And let me point out some distinctions that will be important to remember. In row 46, we ask for gross revenues of the firm. Some firms tell us that they don't track this kind of information, but we believe that all firms should track this information. So let me jump over to the Survey Definitions tab so you can see how this works. On the Survey Definitions tab, we give you the row and the cell number, row 46, we're talking about gross revenue. And here's the definition that we're looking for gross revenue. It should be from all entities of the firm at the fiscal year end, net of client reimbursables. Subsidiary revenue should be reported. If the CPA firm owns less than 100% of the subsidiary, we're looking for the percentage of revenue equal to the percentage of ownership to count as gross revenue. The actual dollar amount for gross revenue should represent all revenues that your time and billing system says you should be charging at standard rates. Accrual basis revenues before bad debt write-offs. So everything that the time and billing says you should be charging if you were capturing all the hours, if you were billing out all the hours, and if you were billing at standard billing rates, that is the gross revenue number. In row 47, we ask for net revenues, which is the actual amount billed net of client reimbursables. Write-ups and write-downs should be taken into consideration here, but bad debts should not be. And again, consult the definitions tab for some additional details. Row 48, that asks for organic net revenue growth from your previous fiscal year end. Here we're asking you to exclude the effects of any acquisitions to determine organic revenue growth. Again, any activity generated by a lateral hire would be considered organic growth. We go down to row 49, and that's asking for total net revenue growth, including the effects of acquisitions. So if you had no mergers whatsoever, row 48 and 49 should be the same. If you did have a merger, chances are row 48 and 49 are different. Row 50, percentage of the net revenues derived from something other than charge hours. Many firms have, for example, a wealth management practice where they are paid based on a percentage of assets under management. That would be an example of revenue from something other than charge hours. So if you've got anything like that generates revenues that are not charge hour driven, we'd ask you to include the percentage of the total there. Let's move down to the net revenues by service area. In this section, we're looking for a breakdown of total net revenues by service. Please be sure to complete this section based on each service area's net revenue, and be sure that the total, which is automatically summed in row 71, equals the total that you provided for us in row 47 at the net revenues. So if you're putting in information along the way there, you'll see down in row 71 it's automatically auto-summed. Just make sure at the end of the process that that equals the net revenue in row 47. We've added a couple of additional breakdowns this year based on feedback from firms last year. In row 56, CFO services, so outsourced CFO services. Row 59, we've added cost segregation services. Row 66, we've added payroll services, and row 67, we've added peer review services. If you've got any other service that is a major component of your firm that's not included among these above, go ahead and give us the dollar amount in 68 and go ahead and type in what the service area is in column C on row 68. In the niche area, beginning on row 74, we're asking for the top 3 niches as a percentage of net revenue. In these areas, you'll again see a drop-down menu, a drop-down arrow indicating a drop-down menu is there for you. We've added the names of the niches that we see most often. This is by no means an all-inclusive list, but these are the ones that we see. So make sure you scroll down. They're in alphabetical order. And if you see that your specialty niche is not included in there, go ahead and click on this other and type in the niche in column C for us. We'd appreciate that. Niches to be launched in the current fiscal year. That would be the year that you're currently in. If there's anything that you want to add or that you're looking to add this year, it's the same drop-down menu. So go ahead and add that information. Let me pause now just to make sure that there's no questions. If there's anything that I covered that you have any questions about, again, you can either raise your hand on the webinar, send us a chat, or just type in a quick question. So let me just pause for 10 seconds or so, give you a chance to type out or just alert us to any questions you may have. All right, I don't see any, but you're certainly welcome to send in your questions at any point in time. So let's keep moving on to the area of firm net income, starting on row 84. So starting in row 85 here, we're looking for the total net income of the firm prior to any equity partner distributions. Let's again jump to the definitions tab for clarification on total net income. So we are now on row 85, total net income before equity partner distributions. So what we're looking for is the net revenue from all services less all expenses. Include among expenses payments to non-equity partners and payments to retired partners, but do not include in expenses any salaries or compensation or return on capital of current equity partners. Don't include unique equity partner benefits such as partner car allowances, for instance, as part of your expenses. So all that should be included as part of net income. So that's what we're looking for in total net income. So again, I would encourage you to keep jumping back and forth to the definitions as you're going through the tab here. Rows 86 and 87, again asking for organic growth and all growth, same definition as above. Organic growth excludes the effects of mergers and all growth includes the effects of mergers. If you had no mergers, these two rows should be the same. Row 88, the percentage of total net income that was or will be distributed to equity partners. What we're looking for here is we would like to know how much of the net income is expected to be distributed to equity partners either during the fiscal year reported or in the first few months of the current fiscal year paid out as bonuses for last year's income. The purpose of the question is to get an understanding of how much of the profits are being distributed to partners versus being reinvested in the firm in some capacity. So if all profits are earmarked for distribution, the number here in row 88 should be 100%. Going down to the firm-wide billings and collections, these are questions we've had for a number of years now, so if you've participated in the past, these questions should look familiar to you. On row 92, realization rate, what we're defining as realization rate is the total amount billed divided by the total amount that you would have billed if you had billed everything, actual hours, total standard rates, essentially net revenue divided by gross revenue as we've defined it before. The collection percentage here on row 93, that's an aggregate measurement of how much of total billings were actually collected. So we're looking for billings that were collected during the fiscal year and are expected to be collected in your current year. So really an accrual basis collections divided by the total amount billed. Check the definitions tab and there's a little bit more detail on the collection percentage. We did have a question come in, so I'm going to jump back up real quickly to row number 43. Did you report any mergers or acquisitions in the year prior to the fiscal year being reported? So if your fiscal year that you're reporting is 12/31/2014, what we're trying to ascertain here is, did you have any mergers in 2013? So 2013 is the year prior to the one that's being reported on. So if you had any mergers whatsoever in 2013, we would just like a simple yes or no. That gives us a little bit of a additional background for looking at some of your growth that you had in 2014. Some firms might have had a large merger in 2013. Their fiscal year end is 12/31. If they brought in a new firm in December of 2013, they should report a yes on line 50. And if you didn't have any mergers at all in 2014, you wouldn't report any mergers for the fiscal year that you're currently reporting. But it would give us some indication of why there might have been a big jump in revenues because of a previous year merger. So that's kind of what that's all about. So hopefully that answers some questions for you. Let me go ahead and jump down, keep going down here. We are in row 94 on the accounts receivable and work in progress section. This is pretty straightforward. We've had this question for a number of years. Just one nuance I'd like to bring to your attention on row 97. For unbilled work in progress, what we would ask you to do is report this number based on what you expect to bill it at, so we can have a more accurate picture of the value of your work in progress. This next section, starting on row 99, firm costs as a percentage of the firm's total net revenue. This is a picture of firm costs, a snapshot of some of the major buckets of expenses that are of interest to firm leaders. It's not intended to be a complete income statement. So let me make sure I get that across. This is not intended to be a complete income statement. It's also not mutually exclusive. So what goes into each bucket is not mutually exclusive. For instance, a marketing director's salary should be included in the firm-wide personnel percentage on row 101, and it should also be included as part of the marketing percentage bucket in row 103. Same will apply for technology costs on row 104. If you've got a technology staff, the cost of those personnel should be included in the bucket for firm-wide personnel in row 101, and it should also be included in the bucket for technology percentages in row 104. Make sure you don't include any equity partner time or compensation or equity partner costs in any of the areas included in the firm costs. And in all cases, please report as a percentage of the firm's total net revenues. For complete definitions of what goes into each bucket, again, I would refer you back to the IPA survey definitions tab and go down to starting with row 101. It'll tell you what we're looking for firm-wide personnel costs, professional liability, marketing costs, technology costs, professional staff training, and recruiting. So a lot of the details are there for you in the definitions. All right, down in row 108, this is pretty straightforward on office space. This section identifies the total office square footage of your firm that your firm owns or leases. If your firm is obligated for space that's not being utilized, we would ask you to go ahead and include it as part of the overall square footage obligation for the firm's fiscal year. If you've got office space that's being subleased by someone else during the fiscal year, exclude that space from rows 108 to 110. We are asking for a percentage of what you own versus what you lease. So we've go ahead and built in this. For some reason, we've had a number of firms who couldn't get those two to add up to 100%. So go ahead and just put in the percentage of office space that you own. And in most cases, that will be 0, which would mean that you would lease 100%. So just to make it a little bit easier on you. Firm capital, row 112. This is the classic GAAP definition. Working capital equal to assets minus liabilities. If the firm has any future obligations to retired partners that are currently earmarked and are not available for the firm's working capital, please include those obligations as a liability. We've got another question that has come in, so let me kind of pause for a second to bring that up. Just one moment, please. Okay. Is the IT staff cost just internal IT staff cost, or does it include billable in IT cost? Great question. If you are using an outsourced company here, technology costs, all staff compensation, direct benefits costs, and all IT direct costs. So we don't refer to it within the definition, but we would ask if you have outsource fees for a third party that's helping you, all that should be counted as technology costs. So that would include anything related to your technology budget here. That should be included in the technology costs. Great question. Thank you for your question on that. All right, let's jump back to the survey form and look at the personnel, charge hours, work hours, billing rates, and compensation matrix that starts on row 114. This is the most common area where firms struggle and is the area where we tend to go back to firms for clarifications the most. So what we're looking for here, we've broken out by staff level, row 117, 18, and 19, equity partners, non-equity partners in 122 and 123, client service professionals in 126 through 131, and administrative and non-client support staff in 135 and 136. This question 133, we'll get to in a second, but that does not get auto-summed in row 137, which is providing the firm-wide totals for this matrix. So on column C, what we're looking for is the total number of full-time equivalents for all the different staff levels. So go ahead and put in your numbers for the full-time equivalents. And if you got part-time people or somebody working not a full year or something else like that, go ahead and put in the decimal points. It'll automatically sum the number of partners, number of non-equity partners, total professional staff will count all of the client service professionals, and everything will auto-sum toward the bottom. Quick question. One of the questions we get most often is how do we calculate full-time equivalent? I will acknowledge that there are many firms who have different ways of calculating FTEs. For our survey, what we are asking everyone to give us is full-time equivalents can never be more than 1 FTE, but can be less than 1 FTE based on a 2,080-hour work year. So if you've got a partner who works 4,000 hours a year, and we've come across some who claim that they do that, that is 1 FTE. That's not 2. So it cannot be more than 1 FTE. If you've got somebody who's working 30 hours a week, count that as 0.75. And if you've got somebody who started, let's say, October the 1st, we would encourage you to count that as 0.25 FTE, because that really helps in normalizing a lot of the numbers along the way here. On column D, we're looking for total charge hours of the group. So the total charge hours for these equity partners. And in this example, 5.5 equity partners. And we built in some checking mechanisms. So if you've put in, for instance, these 5 partners had 10,000 charge hours, let's make that. If we put in that they've had just a very large charge hour in there, we'll have a little pop-up here asking you to review the charge hours for the group, indicating that the average charge hours for the group are more than 2,000. Are you sure you want to continue? It'll at least give you an opportunity to stop, take a look, and see if that is a number that you want to put in or if it's a number that needs correction. So if the answer is yes, you can continue on. If the answer is no, you can go back and put in the right number. Same with the work hours. If you put in for these 5 people, 25,000 work hours, the same pop-up will be here, and we give you a little bit of a heads up based on the work hours per person. And it'll give you an opportunity to update this as you go forward. Oh, sorry about that. That's not working too well. I will look into that. So I will get back to you by the end of the webinar today on why that is where it is. So the one thing that we've added, let me bring your attention to on the far right-hand side, this area in purple in columns L and M. That's a new checking mechanism for you. This is not something that you can get access to, but it's something that you can see, which will give you an opportunity to see what the calculation is for the charge hours per person and the work hours per person. So in this case, I put in 1,000 work hours, and it shows that based on the 5.5 equity partners, that calculates out to 182 work hours per person, which clearly is not correct. So it'll give you an opportunity to go back in and correct that appropriately. So it's just another checking mechanism for you that does the calculation directly. Over in column F, one more thing in column E. Be sure that you're backing out any paid time off. So that would include holidays, vacations, sick time, jury. All PTO should be excluded. So these numbers should be exclusive of PTO. Column F, we're looking for the average stated billing rates for each one of the various staff levels. And then in column G, we're looking for the average annual compensation per person for each one of these various levels. And again, refer back to the definitions tab for that. One more time on row 133, the total client service professional staff with a current CPA license. This is just an indication of the number that's totaled in row 132. So of these 10 professionals that I've identified, how many of them are CPAs? You'll see that that number does not auto sum at the bottom here. It doesn't affect the firm-wide totals. It's just an indication of that. So that's an area that we know is a big area of concern that has caused a lot of problems for some firms. So that is just something to kind of keep an eye out for. All right, a couple questions that have come in as we're going through this matrix area. What if there are different rates within a category? For example, managing partner versus junior partner. I would ask for you to come up with an average of those various different groups. We could keep going down to more of a granular level and get deeper and deeper and deeper in terms of the levels themselves, but for ease of comparison and for definitions so that everybody's looking at the same thing, for those instances where you've got different rates at different people within the same level, just please provide us with an average for that level. Also, our definitions on rows 126 through 131, you'll notice we don't define staff, seniors, managers, senior managers. We're putting it in by years of experience, recognizing that many firms define each one of those titles differently. So we would ask you to just look at the years of experience and put your FTE people within the proper category. Any interns that you might have should be included on row 126. Any paraprofessionals you may have should be included on row 130. And if you've got any other client-serving staff that for whatever reason don't fall into any of the categories above, you can put those numbers into row 131. I don't have a very good idea of what that might look like, but if you've got some odd group that doesn't fit in anywhere else, you can go ahead and put them there, so that would count. So I'd encourage you to as you're going through this matrix, look at the totals for each one of the categories. Make sure that you look at this checking mechanism on the right-hand side as your own personal check to see if these numbers make sense based on what your understanding is, so that the total charge hours and total work hours make sense for each one of the groups. Again, row 137 will auto-sum total FTE, the total charge hours, and the total work hours, so that will all be calculated for you directly. Any other questions? Let me pause there for a moment. Any other questions before we move on that anybody wants to toss out there? Again, raise your hand, put something in the chat box, or any kind of question. Okay, not seeing any immediately. I will continue on. Again, feel free to continue asking questions in the chat room, and we'll keep moving forward. Down in the professional staff turnover and training section, row 139, what we're looking for here is a percentage of professional staff turnover. So this does not include the administrative staff if you had any administrative staff turnover. It should be full-time equivalent professional staff, all professional staff, paraprofessionals, all partners who left the firm during your fiscal year, divided by the number of FTE of professional staff at the start of the firm's fiscal year. Make sure you exclude any interns or exclude any seasonal staff from your calculations so that this can be a truer view of the professional staff percentage. One additional question that has popped up here on the matrix on row 131. The question is, we've got client service specialists who provide bookkeeping and payroll services to clients. Would this group be included in the other category? I would say absolutely yes, it should be, Ruth. If their main job is serving clients and being billable, and they don't fall into any of these other categories, that they're bookkeeping specialists, I would ask you to go ahead and put those into the other professional staff. Thanks for the question on that. All right, back to the professional staff turnover, row 140 and 141, voluntary and involuntary turnover. In this area, we're looking for professional staff who left on their own for voluntary, should be counted in row 140. Any professional staff who were let go by the firm should be included in row 141. So a couple things to keep in mind in this section. These are some areas, again, where we see firms making similar kinds of mistakes. 4 things to keep in mind. Number 1, be sure to give us a number of FTE. We're not looking for a percentage here. We're looking for an FTE number. Number 2, be sure to base it on FTE, not headcount. Number 3, be sure to report only turnover of professional staff, which does include partners, and don't include any administrative staff here. And number 4, as above, make sure you exclude any interns and seasonal staff from your numbers here. All right, let's go down to the internal firm operations section. And this is just a opportunity identifying the professional management and administrative positions within the firm. A couple things for you to know. Salary information, which we do ask for, will be kept confidential. It will not appear in any IPA publication. It is a way for us to include it as part of the aggregate averages for other firms of your size or in your geographic region. Please indicate in each one of these different internal positions if you've got an individual in the firm role. Again, on the drop-downs, just yes, whether they're full-time, yes, whether they're part-time, or no, we don't have a person in that position. So please select one of the drop-down menus here. Excuse me. Indicate their total compensation, which includes salary, bonus, overtime, and commissions. Indicate their years of experience and the number of years within the firm. If you happen to have more than one person in a position, I'd ask you to go ahead and just provide an average for the salary of the person or the people in there. And if you have less than one full-time equivalent people within the position, for instance, if you've got, let's move down to, some firms have part-time marketing directors. So if you've got somebody who's part-time, and let's say they work only 3 months of the year, you might be currently paying them $20,000. What we would ask you to do in that circumstance is go ahead and give us the annual salary as if they were part-time, as if they were full-time. So that way we can compare compensation for others. So if you've got a part-time person working 3 months out of the year that you're paying $20,000, then go ahead and just change that compensation to what they would be paying if they were full-time, so we can know that. So that'd be very helpful. One thing to keep in mind in row 150, we do ask for whether you have a chief executive officer. What we're looking for here, this is a CEO position that is not the managing partner. It's a professional administrative executive brought in to run the firm. So if you brought in somebody from the outside who's strictly an administrative CEO who reports to the managing partner, who reports to the executive committee, their job is to run the firm. That is the kind of person we're looking for. We do ask a second question here to capture whether that CEO is a current or past-serving client-serving equity partner within the firm. In some cases, firms insist on saying that they do have an executive officer who makes $800,000 a year. And in most cases, that is the managing partner, and that's not the administrative CEO that we're looking for. So let's kind of keep an eye on that. So if you would, just go ahead and indicate whether you do or you don't have people in each one of these positions. All right, let's move on down to the firm ownership, starting in row 195. These are pretty straightforward. Again, compensation definitions are included for what we're looking for in compensation. These numbers will be kept confidential. They will not be included in any IPA publications. They're being used for aggregate information only. So if you would please go ahead and give us that kind of information. On the highest equity partner comp, the lowest equity partner compensation, and the total managing partner compensation. This would include all of the managing partner's compensation, not just any additional dollars that he or she might receive for being managing partner, but the whole bit that they earn in that. Section 208 to 219, if your equity partners receive compensation credit for any of these areas, we would ask you to indicate yes or no on row 206. Do they receive any compensation credit for any of the items listed below in row 208 to 219? So if the answer is yes, just go ahead and tell us which ones they get additional credit for. Straightforward, but again, some firms kind of miss that as they're going through it. Section 220 is specific to equity partners. So we'd ask you just to kind of give us the information asked for in there. One item, if you're not tracking some of this information, we would encourage you to consider the potential value of tracking that information. This again these questions have been vetted over several decades by practitioners, by managing partners, by consultants as to the kind of questions that firms are finding very useful. So if you are not tracking some of these questions, please take a look and see whether there's any value to your firm in doing so. Let me call your attention also to row 229. How many non-CPA equity partners does your firm have? So this could be if you've got a marketing director who is not a CPA, who is an equity partner in the firm, that person would be included here. We are not asking for non-equity partner count. We're asking for non-CPA equity partner. And we're looking for a head count in here, so make sure you recognize the difference of those two. Section 230 focuses on the managing partner and the CEO of the firm. If you don't have a managing partner, you can just leave this section blank. If you've got several managing partners, as a couple of firms do have, we would ask you to provide an average where appropriate, or so that we can have some idea of what a managing partner in your firm would look like. All right, let's keep moving on down. In section 237, on the managing partner piece, this question is asking for the dollar amount of client business that the managing partner personally manages, their personal book of business. So this would not be the total amount of revenues for the firm. We recognize that managing partner is responsible for that, but we're looking for what the amount that they personally manage. If they're 100% focused on firm management, if they've got no billable hours whatsoever, just go ahead and put a 0 in that spot. Down in the newly admitted partners section, starting in row 239, this section addresses both equity partners and non-equity partners. So we'd ask you to be sure to read the question carefully to see which is being addressed. Again, we're looking for head count here, not full-time equivalent. And please report only those people who were admitted during your fiscal year that you are reporting. So if you've got a December 31 year end and you are admitting a lot of new partners on January 1st of this year, we do not want them included in this head count. It's specific to the fiscal year that you are reporting. Row 241 and row 243, we're asking for, of the number of partners that were admitted up above, how many were lateral hires, which are brought in from another firm, brought into your firm directly as a partner. And again, there's a definition included in the IPA survey definitions for you to take a look at. Row 245, if you have a buy-in amount that's defined for new equity partners, we'd ask you to go ahead and indicate the dollar amount there. If you've got a formula or some other way of calculating a dollar amount, if there's a way to indicate what would the buy-in amount be for a new equity partner if they were to start today, go ahead and put a dollar amount in there. If that's just not within the calculable ability based on whatever formula you've got, just go ahead and put something in the firm clarifications tab to explain what you've got in row 245. That would be terrific. Row 246, and that's that section dealing with partner retirement, specific for equity partners. If you don't have a specific retirement plan defined by the terms of your partnership agreement, go ahead and select no for this section, and you can skip the rest of it. If your partner agreements do have definitions and terms defining a retirement plan, that we'd ask you to put a yes in there and answer all the questions. If you just offer a 401k the way that you do for any other employee, we would consider that not a retirement plan as defined by the terms of your partner agreement, so that would be a no for that section. All right, down on the firm planning and governance portion, we are asking you just to select yes. Again, these are all drop-down menus. You can copy and paste a yes, or you can just use the drop-down menus. Do you offer the following in your firm? If you're unsure if you have any of these, leave it blank. Some of these tools are specifically indicated as formal. For instance, formal client acceptance guidelines, as opposed to what just might be in somebody's head. If you do have formal guidelines, we would ask you to select yes. If they're not formal, don't select that as an option that you are using. Also, we're asking for written. If you have a written succession plan, the answer would be yes. If you've got a succession plan in your head, the answer would be no for that one. Same down in the benefits area, just indicate with a simple yes whether you are providing these particular benefits. We do recognize that there may be some benefits that you're providing to equity partners that might not be provided to professional staff, or they may not be provided to administrative staff. If you are providing these in any capacity, we would ask you to go ahead and indicate yes in this section. Now, those of you who are with a couple of associations, specifically Prime Global North America and Leading Edge Alliance, have some additional questions after row 303 that are specific to your associations. Please go ahead and complete those entire sections based on the definitions that we're asking for in those arenas. You'll catch back up to everybody else on row 434. So everybody's row 434 starts out with firm challenges. And again, we would ask you to select from the drop-down menu. These are the challenges that we tend to see the most frequently. If yours is one of your top three challenges is one of these, please go ahead and select it. If it is other, select other and go ahead and type in the white area to the right here what challenges you've got so that we can get an idea of your opinion, your perspective, your view of what the top challenges are that you're dealing with. Row 439, everybody's answer is defaulted to no. This is, does your firm wish to opt out of any IPA accolades based on this survey? We use the results of this survey to identify firms for accolades like the best of the best, the top 100 firms, the top 200 firms, the fastest growing firms, and most firms that participate in the survey would like to be considered for the accolades, and if they are among the rankings, they would like to be ranked appropriately in terms of the top 100 or the top 200. If for whatever reason your firm does not want to be included. If you don't want to get the recognition from IPA, if you don't want to be on anybody else's radar screen, you can opt out here and just go ahead and change the no to the yes. And then finally, at the bottom of this, just in terms of approval for submission, this is not a requirement, but is certainly a best practice to help ensure that all data submitted is correct and to reduce the need for clarifications. We would ask for the managing partner or the CFO or CEO to review the section, to review the survey prior to submission. So that's the survey. When done, save it and send it to us here at survey@platgroupllc.com based on the results. So a couple of things before we wrap up here after the surveys are submitted. A couple things. One is questions we get on a regular basis. How long does a survey take to pull together all the responses? Unfortunately, there's no real rule of thumb to answer that question. This survey for a lot of firms was distributed last week. We've already got some firms that have submitted their complete surveys. Other firms, it might take a while. So the answer is, depending on whether you have access to the information quickly, if your firm has management reporting systems in place that capture the data requested, you should be able to access it all pretty easily. If you don't have those systems in place, it might take you a little bit longer. Most of what we ask for comes from the time and billing system, payroll system, and your knowledge of the various tools you use for compensation, governance, and employee benefits. Our process, once we get these surveys in, is we will review it manually. We'll look for anything that looks odd, or we will look for anything that is out of the norm, and we will go back to the contact person for clarifications just to make sure that we get the correct information. Sometimes it's a fairly short list of things that we clarify. Sometimes it's a pretty long list of things we will go back to you for. We've got about 60 different things that we look for inside the survey here, and most firms do a pretty good job on it, but we'll come back to you for clarifications. The final deadline for everybody who participates is in early June. We will then start our process of pulling all the data together, doing all the analysis of the data, and then getting to the actual reporting. Our timeline for reporting, we have our August newsletter, which reports the top 100 firms, along with an analysis of the top 100 firms. And everybody who participates in the survey, whether you're a subscriber to Inside Public Accounting or not, will get a copy of the August top 100 issue. Our September newsletter ranks the top 200, so number 101 to number 200, and it will rank the best of the best firms. We will alert the best of the best firms in August that they have been identified as best of the best firms, so you should know by the end of August on that. Any questions you've got along the way, you can email to survey@platgroupllc.com. Our entire team here is available to talk to. Myself, Kelly Platt, Chelsea, or Mandy, Chelsea Page or Mandy Heine. Any of us are here to help out on the question, and we'll be able to direct your question to the appropriate expert on our team here. But go ahead and send us any questions you've got to survey@platgroupllc.com. Again, if you don't have a copy of the 3 operational surveys, the Firm Administration, Human Resources, or Information Technology, and if you would like to complete those as well and receive an executive summary of those results, go ahead and contact us at survey@platgroupllc.com, and we'll get a copy to you. That's the end of our session today. If there are any additional questions, I'd encourage you to go ahead and send them in to us. You can send them to survey@platgroupllc.com. I'll put the contact information for us back up on the screen here. Call us at our telephone number, 317-733-1920. We'll be happy to answer your questions. Again, and some of you are working with associations. You've got a survey that is specifically branded to your association. If you've got any questions for us about the timing, if you've got any questions for us about any of the additional questions that your association is asking, please be sure to get in touch with us. So thank you in advance for your participation in the IPA survey this year. We are in the 26th year of doing this. We're delighted to continue to raise the bar on the reporting and the analysis of this. And we'd encourage you, if you haven't seen the results of the 2014 survey, whether it's the benchmarking report or the executive summary or any of the analyses, please reach out to your managing partner. They likely have received some of that information. You can go to our website at insidepublicaccounting.com and download the executive summary from last year. The reason for that is I know a lot of you are firm administrators, a lot of you are people who don't get a chance to see the back end of what comes out of this entire process. I think it's really helpful and really important to you to know how all the work that you're doing on the front end translates into reports on the back end. It's also helpful for you to be able to look at those reports and see if there's anything that strikes a chord in you, of ways that you can better assist within your own firm on your own benchmarking. So again, thank you for joining us today. Thank you for your participation in the survey. Know that your participation helps make this one of the largest surveys available to the profession. And all of us appreciate the trust and confidence you've placed in our firm to deliver the gold standard in benchmarking to you and to the profession. So again, if you have any questions that have not been answered, feel free to contact us at survey@plattgroupllc.com. And if you have no other questions, thank you again. We appreciate the participation and have a great, great week. All the best.